Hey, you have Patrick Findaro here, co-founder at Vetted Biz. Very excited to have on Bill Eastin, who's a franchise broker consultant at Franchise CoPilots. We just met, I guess it was 2-3 weeks ago
Yeah.
at the Franchise Broker Association event. We started getting talking at our booth, going through the demo at Vetted Biz, and then the topic of semi-absentee franchisees came up and owning a business, but not working full-time in that business, and just the appeal of that and how much demand there is and what the potential there is in the franchising space for franchisors to offer that. But many more franchisors should be offering that in a manner that's more tailored to the prospective franchisee. So in today's conversation, we're going to focus around semi-absentee ownership of a franchise. There's over 2,100, but the vast majority of franchises are not set up for semi-absentee ownership. And it's Bill's job to help you navigate all the franchise opportunities and figure out which one might be the right fit to match that with your time management, your industries of interest, investment amount, et cetera. So Bill, really appreciate having you on today.
Yeah, happy to be here. It's a bit of a hot topic with me.
And remind me, before you got into the franchise consulting space, you were working in wealth management?
Yeah, I was a branch manager for in one of the Morgan Stanley branches in Michigan.
Okay. So I can imagine a lot of those type of folks that are using Morgan Stanley services on the wealth management side, they have their business. They might not, they're interested in investing in stocks, ETFs, but they might want to also invest in a business that they're not working full time in, right?
Yeah, I mean, when I first started looking into the whole franchise broker industry, it kind of hit me like a ton of bricks because as a branch manager, I had about 50 financial advisors that worked for me, and I would spend about half of my day helping them improve their client experience. And the other half of the day was spent talking to the competition and trying to get top producing financial advisors at UBS and Wells Fargo and Merrill Lynch
Bring their
to
book
switch
over.
franchises and come to work at Morgan Stanley. So once I kind of dug into this, I quickly figured out that the skill set to be successful at that, and I was very successful at it, is very similar to what it is for this. It's helping people figure out what it is they're trying to accomplish, dig into the database, check all the boxes, and match them up with a handful of things that would be a really good fit for them. So,
And are most of your clients, I guess, what's your typical client? Is it someone coming right out of college, or they're more established in their career?
I do a lot of work on LinkedIn, and my average client is probably somewhere between 40 and 60 years old, has been in corporate America for 10 to 30 years, has got a little bit of net worth built up, has probably got a significant chunk of money in a retirement plan and a 401k plan. And, maybe they just took a severance package, and, and maybe it's not the first time that that's happened. And they wake up in the morning and the light bulb goes off and they go, you know what, I'm done with corporate America. I've been thinking about starting my own business for a long time, and now is the time to really dig into that and see if it's going to work for me.
Great.
That is probably half of my clientele.
Okay. So you have those folks that got a nice severance, they have the capital, and I imagine they're willing to work, they have the hours, the opportunity cost isn't so high, but you also have those 40 to 6-year-olds that have a nice paycheck, 100, 150K, 200K, and leaving that, especially if their partner is not making the same amount of money, is probably a bigger step, right?
Yeah, I mean, if that person is the main breadwinner in the household, and they're younger, that combination of things makes it harder for them to just walk away from a 6-figure paycheck. If the person is closer to that 60-year-old mark, and they've been, they've built up some net worth over the last couple of decades, to be able to fund a startup of a business and support their own household is not such an arduous task for them. Which brings us to what you and I were talking about at the conference, is that the number of franchisors out there that will allow for semi-passive ownership at the onset, meaning they can hire a manager on day one to run the business for them. I think the industry has realized that to attract the kind of people they want, they're going to need to morph their business model to accommodate that. And I think that's happened over the last 10 years because you see more and more and more that will allow for that on day one. The newest trend, and I think it's where the industry is headed, and there's a few franchise concepts out there that'll do it now, is that they have an in-house field management team that will, for a flat fixed fee, literally run the business for you. And it almost doesn't matter what type of a business. Obviously, you want to own a business that you see the value in it, and maybe you eventually want to get involved in it, but you're signing the franchise agreement, you're funding the bank account, and if there's real estate involved, you're signing the lease. Other than that, you have absolutely no involvement in the business. And for the people that are at the younger end of that age spectrum that we've been talking about, that are maybe the 40 to 50 years old, and they really like to own their own business now, they don't want to wait another 10 years, but they just can't afford to walk away from that 6-figure paycheck.
That's going to keep going up probably over the next 15 years, potentially.
Exactly. And so that allows them to get the business running. And maybe they let the in-house field management team run the business for the first 12 or 18 months and ramp the revenue up to the point where the person can draw enough money out of the business to replace that lost income. And they almost kind of use the field in-house field management team as like a set of training wheels. Not only does it buy them some time to get the business ramped up, but it also allows them to sit in the background and watch and learn. There's not many of them that offer that right now, but we're starting to see more and more of them. I learned about a few more new ones when we were at the conference a couple of weeks ago. And I'm hoping that more and more of the franchisors, look, I realize it's a big undertaking for them. The reason they
for sure, and some people become franchisors not to be managing those corporate locations.
They don't want to run 700 different locations. But I think if they could look at this through the lens of, we'll help you run the business for the first year. And maybe we can do that for 20 or 40 or 50 franchisees a year. Very few people want the franchisor to run the business for them forever. They want them to run it in the beginning to get the business ramped up, and they can stand in the background and watch and learn. So it's going to take some additional staff for most of the franchisors to be able to do that. But most of the franchisors will tell you off the record that the locations that their field management team are running are performing better than their franchisees who are doing it
some
themselves.
franchisors disclose that. Like I know Marco's Pizza will break down corporate locations versus franchise locations, which essentially that's what it is. If it's their field management team running the location, it would be more, you would think that financials are more trending as if it were a corporately owned and operated one.
Right. Right.
So yeah, I've seen a few different businesses in the space, especially in the services, healthcare, pet care, some food concepts, but I definitely do see a niche of anywhere from like 3-5 locations where the concept's been proven up to 50, potentially even more, where franchisors should really consider this as a way to basically receive a fresh injection of capital and grow together with their investors, these individual franchisees.
Well, and I tell you, look, the proof is in the pudding without getting too detailed about who these folks are. But I mean, one is in the fast food space. One of them is in the in-home elder care space. The fast food space, over the course of, I don't know, franchising for 2 or 3 years, they've gotten to the point where I think they had just right around 100 locations. And then they opened up this idea that they had an in-house field management team that would run the business for you. And they added on 35 or 40 licenses in a matter of 6 months. So quickly that they literally pushed the pause button and said, we're not taking any more of these because we can't handle the volume. And the exact same thing happened with the in-home elder care business that they've been franchising for 4 or 5 years, had 35 or so locations. They opened up this, this concept of we'll manage the business for you for a flat fee. And they doubled the number of licenses that they had in less than a year. I mean, they went from 35 to like 7.
It's kind of like a proof too, that the concept works, that there's enough margin in the business to have a day-to-day manager from day one, which that will eliminate 80-90% of franchises where it's just not, maybe it's just not that great of a business, or it's going to take a year, 2 years, like a staffing franchise to really break even and have the owner drawing dividends out. And that's something that you should be mindful of, when do you pass break even and when are you starting to get money out of a business?
Yeah, exactly. Yeah, for sure.
And for those, I mean, this should be a wake up for franchisors, especially emerging concepts that are trying hard to recruit franchisees and maybe spinning their wheels to look at this option. And for Bill, for the franchisors that allow an owner to maybe just work 5, 10, 15 hours a week, could you walk me through that process and kind of how that works
Sure.
with selecting franchisors?
And again, it's the whole idea that the industry has kind of morphed over time. That's probably one of the best examples of it, because the database that we use at the Franchise Broker Association, we've used in the past. One of the information points it would tell you is, do they allow for a manager to run the business on behalf of the owner from the onset? That's one option. The second one is, they will allow for a manager to run the business after the first 12 months or after the first 24 months. And, I kind of keep a list in my back pocket of all the concepts that I like that all have the box check that says you can hire a manager from day one, because there's a certain subset of the clients that are out there that go, I want to own my own business, and either I can't invest 40 hours a week or 60 hours a week of my own time, or I don't want to. A lot of people obviously get into franchising for more, as much as to make a living from a lifestyle perspective, and they want to spend more time doing whatever they do on their boat.
The number one reason is being your own boss. I was kind of surprised, but a very extensive survey was taken, and that was the number one reason. It wasn't financial related. It was just lifestyle related, just being your own boss.
So, that's part of the, when I'm going through my initial discovery conversation, if you will, with a prospective client, and they want me to put together a list of possible concepts for them to consider, that is one of the obvious questions that I will ask them is, I break it out and I say, look, there's fully passive ownership structure, which is a very few. Other end of the perspective is owner operator, where whatever it is you're doing, you got to be there doing it all day, every day. That's the other end of the spectrum. There's also very few in that camp, but most of them are in the semi-passive. And you can take that semi-passive ownership category and kind of split it into two parts. And it is, do they allow for a manager to run the business from day one? Or do you have to run the business for some set period of time before they'll allow you to turn it over? And there's pros and cons to both. I mean, there's a lot of businesses that I absolutely see the need to have the owner running the business for the first year so that they really understand what they're getting into.
Sure. And I'm sure some are very relationship based. If you're doing B2B sales, it's tough to hire that role under 100K for someone to really manage those type of relationships, right?
Well, yes. And I mean, there's a lot of businesses that I kind of break it out when I get into the conversation with client. We start talking about different concepts, is that some business to consumer businesses are very heavy advertising impacted, and others, there's no advertising at all. It's all marketing. It's about getting out and getting in front of who your referral sources are and who will direct business your way. Those are the ones that especially, it's important for the business owner to be the guy who's the face of the business for the first year or two, to build those relationships so those referral sources will do their thing for you. So
for sure. Like, I mean, in terms of your franchise consulting practice, you're the owner. You couldn't hire someone to do your job with the type of role that you're in.
Let me choose my words carefully on this one. There are very few people who are franchise broker consultants who have built a practice that if they decided they wanted to retire or stop practicing, that they have an asset in their business that they could turn around and sell to somebody else. I mean, 10 or 15% of the people that I talk to, I suggest to them they might want to consider becoming a franchise broker based on their background and their resume and their demeanor on the phone. But I become very clear to them, you get into this, you are creating a job and a paycheck for yourself. And the day I stop picking up the phone, the cash register comes to a screeching halt. So unlike most other franchises where you can build up a nice following, the clientele, and you have an asset that you can sell at some point in the future. So that's another one of those mechanical questions that I ask people are you just interested in replacing a cash flow stream for yourself? Or are you trying to build a business that will have some asset value that you can hand off to your kids or you can sell to somebody else? Because those typically are two very different businesses.
Yeah. And your need for cash now versus potential cash in the future.
Right.
Are there any interesting industries or specific concepts that you see bode well for that type of investor that can't leave their job and really needs a day-to-day manager from day one?
A lot of them are the service-oriented stuff, because typically with the service-oriented, those businesses in most cases are stimulated by advertising. So if you let the right amount of people know what you do, how you do it, and how you can do it for them, they will come seek you out. So you being the face of the business is not nearly as important as one of those businesses where it's all about referrals. A lot of the in-home elder care stuff, depending upon for people that like that space, I point out to them, you've either got to be willing to hire an HR type person, or you got to be able to be willing to work with 150 part-time employees, because the only way that business ramps up and gets successful is if you have a lot of clients and in turn you have a lot of employees. But you can also kind of stack businesses in that for 20% of the people I talk to want to own more than one business. And if they're smart, they want to own things that are complementary to one another. So the vertical integration is in-home elder care. Okay. And we're helping mom stay at home and be safe and giving her the help that she needs. And when it gets to the point where mom can't stay at home by herself anymore, even with help, and it comes time for mom to go to an independent living facility or an assisted living facility or a memory care unit, the very best person to help the kids figure out where mom should go are the people that have been taking care of her for the last 2 years.
Sure.
Enter in elder placement business.
Okay.
So that's the next step. And there's a lot of companies out there that they do both. Some of them will do both. They're typically separated. The third step in that is, okay, now mom is going to an assisted living facility and we've gotten her settled and everything is great. Everybody's happy. And the kids go, well, now what do we do with all the stuff in mom's home? Right? The third step in that progression is a business that does estate sales.
Yeah, there you have it. Your client lifetime value's gone up like 3x.
Yeah. Those
and I imagine in the beginning, as you get started, you could be referring out that business, but after it becomes a big enough size, it's better to start that business and hire a manager to run it.
Yeah. Well,
I've seen that with property management franchisees where they start bringing services in-house, where if you have 100 properties under management for long-term residential, you might be filling out everything, but you get to 200, 300 properties under management. There's like a lot of sizable businesses that you could be running based on the relationships.
Yeah, for sure.
Do you have like a general investment range for someone that's looking to invest in a business that they're not going to be working day to day in?
Say that again, so make sure I'm answering the right question.
Sure. Do you have like a general investment minimum, you could say, like 100K, 200K, that you set for your clients if they've told you they're not willing to work full time in the business?
Not really. I would say probably the lion's share of the franchises that are out there now, again, this is the industry morphing over time. They're $100,000 on the low end to maybe 300 on the high end. And that's probably 85% of them. I mean, there's a handful that you can get into all in for 50 or 75 grand. There's a handful of them out there that are 800,000 to 3 million, it's a lot of real estate and a lot of build out, but, again, most of my clients fall into that 40 to 60-year-old range. They've got some net worth. They've borrowed money in the past for different various things. So I give them a brief explanation about how SBA loans work, how you can tap into old retirement dollars for new business startups, or you can bring cash to the table. And then I'll pose the question and say, okay, between those three things, some people are very comfortable borrowing money. We call that OPM, other people's money, use other people's money.
A lot of people get rich that way.
OPM. Some people are really debt and averse and don't like having that monthly payment. And I'll direct them to say, well, if you've got $500,000 in a 401k plan, that's your old employer, maybe we take $100,000 out of there and fund the majority of the business with that. Typically, the where's the money going to come from is not that's about the third or fourth thing on the list of concern about, do I want to do this at all? And then a couple more notches down the shopping list is how are we going to pay for it? I mean, I jokingly say this to a lot of people, and I say, look, I don't mean to be flippant about this. The money's not the hard part. It's just not. I mean, look, maybe for somebody who's 24 years old and who's got a college 3 months ago, it is for them, absolutely. But when you start talking about somebody who's 50, 60 years old and has got some net worth, making a couple $100,000 investment is very significant to them, but it's not gonna, shatter their lives if the thing doesn't work out exactly the way they had it planned. So
sure. And what are some of the most important things that you vet with your clients when you're investigating these type of franchises that they're not working day to day in?
That's an interesting one. It probably goes back to my initial conversation, and it's what I refer to as a series of mechanical questions, if you will. And it's, is a business that you can run from home important to you? Some people will say, yeah, I would prefer to run it from home. Other people are like, no, I got to get out of the house. I got to have an office to go to. It just depends upon what camp they're in. How do you feel about employees? How do you feel about picking up the phone and calling people to generate business? That kind of stuff. The obvious one is how much money do you want to invest? But how do you feel about employees? What type of employees do you want? That kind of stuff will build the structure around a search criteria for me, so that I can check most of the boxes, and I'll come back to a client with a list of 15 or 20 or 25 different things that, based on all the information they shared with me, on paper, everything on this list looks like it's going to be a good fit on paper.
Sure.
And I'll tell them, I'll say, look, I fully recognize that you're going to go through this list of 20 plus different concepts, and you're going to cross half of them off almost instantly. And that's what I want you to do. The object of looking at a list of 20 is not to pick the winner. It's to get rid of all the losers.
It's well said.
I used to make the joke to people. Everybody knows who Dale Earnhardt was, the guy, the NASCAR
yeah.
driver. So you know what Dale used to call a guy who finished second in a race?
What?
First place loser. So, the object is go through and get rid of all the ones you don't want, but I'd rather let my clients make that decision than me make it on their behalf. I know when I went through the training program a couple of years ago, and I got a lot of friends who are brokers, they have a fear of confusing their clients by showing them too many options. So they will show them their top 5 and say, these are the 5 best things I found that I think are the best fit for you. And most of the time they are, but I learned very quickly that my top 5, and if I show somebody a list of 25 and their top 5 are never the same 5.
Well, for the reason you just said, I mean, it's so subjective. What is your motivation? Why are you doing this? Are you comfortable talking to such and such person? Are you want more inbounds coming, outreach? There's so many things that are subjective, and probably it's good for the folks just to have some time to digest the information and kind of see what's out there, right? Instead of just 3 industries and a few options in those 3 industries. I'm sure in those 20, there's some pretty distinct industries that are reflected there.
Well, and to try and frame this and start at the right point in the process, after I've built this list based on a lot of the questions that I've asked and some other data, I'll provide them with a list of 24 different business concepts and a very brief 1 or 2 page description of each one of them. And I literally kind of hit them right between the eyes and say, look at this list through the lens, and only the lens of, is this a business I could see myself doing? And do I think I'd enjoy it? Because that's where you got to start. I mean, humor me that they wouldn't be on the list to begin with if the financials weren't at least reasonable.
Exactly.
We'll get to that part a little later down the road. But start with, is this something I think I'd enjoy doing? Because if you don't, go back to work for corporate America if you want to be miserable, right? I mean, that's the whole point of the thing. It's lifestyle.
Yeah, it's well said. The right reason why you're doing this.
Exactly.
And Bill, in terms of data that you're tracking daily or weekly, are there items that you are kind of monitoring? Keep in mind, our audience is franchise consultants, franchisors, prospective franchisees, and at Vetted Biz, we're all about data. And I'm kind of curious to hear about your franchise consulting practice and what data that you're tracking daily, if not weekly, to grow your business.
Yes, I do that. And I would tell you, I am at the opposite end of the spectrum from being technical about that. I'm I think what I'm good at in helping people understand a business is I'm a good storyteller. So I'm looking for success stories from the franchisors. Tell me about, you've had 3 locations that had the biggest month ever in their opening month, or, they just, you had your first location out of 100 that did $1 million worth of revenue in 1 month, and how'd they do it? Because I think that's how people can relate to this for themselves. Is not everybody looks at spreadsheets the way that you and I do, but a lot more people will say, well, this is the guy who did $1 million worth of revenue in 1 month. And I look at him and I go, he's no different than me. I could do that. Yeah.
Yeah. I mean, one thing's quantitative, but what you're looking at is qualitative. What's the story? What's happening behind the scenes? Why are they doing that?
Mm-hmm.
So I imagine you've seen this for hundreds of franchisors, and on the individual level, different franchisees. What amounts to their success?
Yeah, I mean, honestly, I think if I sit and think about them, the ones that are experiencing the most explosive growth are the ones that tell the best story that people can relate to. I mean, there's a couple franchises out there that I won't get into names, but they're in the biohazard environmental space, and I look at it and go, that is a fantastic business model, and there's such a demand for that. And the story they tell would put anybody to sleep, and they can't get any traction. And I don't know. I think a lot of it's just about telling the story and having people get enthusiastic about it on their own.
Yeah, no, I think that's well said. There's definitely some industries that are not sexy at all, but with the passion and the storytelling, they've been able to really grow and boom. And there's other ones and not so attractive industries that have they've been around 20 years and they're still at 30, 40 units. And I'm sure that's a big part of it, just kind of how they frame the story.
And some of the ones that are doing really well, and I think tell a good story, have got some sort of a niche. And I don't mean necessarily the product, but and again, I won't get into specifics of who they are, but I mean, there's one business that has what I would call just a world-class call center, and they've got a couple hundred locations around the country. And the last time I talked to the rep for them, he said that call center was booking 12,000 appointments a week for their 200 owners. You step in the door and your phone's ringing. I mean, there's another one that's in the medical supply device type space, and they have 45 or 50 national contracts. And for their average franchisee that's been open more than a year, 40% of their revenue is coming from those national contracts. So you got people beating a path to your door as soon as you open your door before you do anything. Those are the kind of stories I think that people want to hear, that I don't want this to be 100% on me to go out and generate every single nickel or dime. I want some help from somebody, and that's the kind of stuff they're looking for. I mean,
I think
the call centers just knock their ball out
I think that's been a big trend where it's kind of divide and conquer, where franchisors are coming in with the technology, the lead generation, maybe the booking, and then it's more the franchisee on the execution side, hiring, firing, driving the value in their franchise location. And we've seen this with like Domino's Pizza, that the stock's gone up like 4,000%. They've owned delivery, they've owned the technology. The franchisees just got to execute and hire and fire the right people. And a lot of service concepts, you see the same thing, that aren't household brands now, but I'm sure in 20 years they'll be on the board.
Well, and it's funny you mentioned Domino's. Obviously, I've got a long history in financial services and the stock market. And the last decade that we just finished up last year, the number one performing publicly traded security for that decade from 2010 to 2020 was Domino's Pizza.
I did not know that.
Beat Apple, Microsoft, Google.
I knew it Tesla, beat Google, and it's up I think probably from that time frame, it's up like 4,000, 5,000%.
Yeah.
And I think a big part of that is divide and conquer. Domino's is dominating the technology, site selection for real estate, all the delivery infrastructure. They kind of invented the ghost kitchen, and they've been doing that for 20 years, where they have the tech, and it's a franchisee that's coming in to execute.
Yeah. I mean, that's that's one thing that I explain to my clients pretty early on is, why veterans make such great franchisees is because the franchisor doesn't really necessarily want to hear about your 17 great ideas that's going to improve his business model. He wants somebody that's going to follow the recipe. They're not interested in cowboys.
Yeah, I had a interview yesterday with one of your colleagues from FBA, and he's a veteran, and he executed super well on his first franchise, had a nice exit, and I don't think there's a coincidence.
No, not at all.
You're managing, if you're an officer, you're managing 10, 20, 50 plus people, and there's a plan, and you have the best intelligence behind you. You got to then just execute on that.
Yeah, for sure.
Well, Bill, this has been an awesome chat today. It was really good talking about all things related to semi-absentee ownership, and also kind of what you should look at when you go to buy a franchise, and kind of what we just ended with, kind of the divide and conquer, and what some of the most successful franchise systems exhibit and provide for their franchisees. But we're going to leave your contact information for anyone that's interested in buying a franchise or chatting with you further. But just wanted to turn it back to you to see if you have any concluding thoughts for prospective franchisees, and even for franchisors that might be listening.
Honestly, this is for the franchisors out there that have been franchising for a handful of years, and you got 20, 30, 40 locations, and you're adding 3 to 5 to 7 to 10 a year, and you'd like to be adding 3 to 5 times that amount, and you're just not growing at the rate that you want. I know it's a big undertaking. I know it's a big capital. I would seriously encourage you to look at putting a field management team in place to give people the option to buy a franchise from you, but to have you guys run it for the first 12 months or the first 18 months. I mean, the 3 that I know of that do it, they make the franchisee sign a contract for 12 months because they want a commitment that they're going to do it for at least a year to make it worth their while.
Sure.
But then it's on a 30-day notice after that, so that the owner can come in and take the business over whenever he wants to. And most people do want to take it over. But if you're not getting the kind of traction you want, and you'd rather be adding 40 or 50 licenses a year, proof's in the pudding. The 3 that I know that are doing it in the last year, they had to push the pause button because they had so much activity and so many, new franchisees coming online. So that would be the case. And for the prospective franchisees out there that think you want to own your own business, again, I don't mean to sound flippant about it. I said it before. The money's not the hard part. It's the desire and the will to want to own your own business. I've got funding specialists. Everybody else that does this does as well. Again, not to sound flippant, it's not a walk in the park, but the money's not the hard part. So if that's your biggest concern, call me or talk to somebody that you know that's in this space, and let them explain to you the different various options that you have. So how's that?
No, it's perfect, Bill. Thanks a lot for that final note. And again, if you'd like to get in contact with Bill Eastin from Franchise CoPilots, his website and contact information is in the show notes. Thanks again for everyone that listened in or watched.